Palantir, PLTR stock, just reported their second quarter results, and the stock, while it was down with the broader market sell-off, it did pop back higher after hours in response to this earnings report, up around 13-14%. Since my last video on Palantir, where I was warning investors about their risky and elevated valuation, the stock was roughly flat, but now it is popping that 13-14%. So I'm wondering if, maybe I'm missing something here. So let's dive in. I go to AI Ticker Chat, where now we've made chatting with AI completely free. So you can go check that out yourself if you're interested. And so I said, hey, key highlights from their earning release is talking about Palantir. Is this business getting stronger or weaker in your opinion? And the key highlights are, really exceptional when you're looking at Palantir. 27% year-over-year revenue growth. Commercial sector experiencing 55% revenue growth, seeing significant profit margin improvements, now around 20% profit margins, increasing their company guidance for the year in terms of their revenue, expecting their, the U.S. commercial revenue growth of around 47%. So clear acceleration in this business. And so it's strikes AI here saying, yeah, this business is clearly getting stronger. It's clearly getting better. So what's driving that? What are some of my thoughts? The first thing that jumps out is this inflection in this business, because you could see, their commercial, U.S. commercial business, low teens back in 2020. Clearly starting to turn on the spigot, and then in the last year really ramping up. And I think this ramp up directly ties with their AI platform launch, where they are enabling corporations, enterprises to learn how to leverage LLMs. So that way it's actually a productive tool for businesses. And their case studies, with leveraging the Palantir AI platform suggests that it's not just, a fancy chat tool, but that it's really helping enterprises deliver products better, faster, stronger, that sort of turnaround. And so they talk about, look, we have large wholesale insurance brokerages, leading global life science companies, leading convenience store chains. So these are three examples of companies where they have this initial boot camp with their AI platform. And then just in a matter of weeks, 16 days, less than 6 weeks, 25 days, they have a paid pilot, or they have a 7-figure deal that's initially signed. And then there's discussions about wider implementation across the company. And it's not hard to see why, when you have customers like Panasonic saying, look, their platforms are empowering maintenance technicians to diagnose and fix equipment problems faster, increasing line uptime, decreasing rejects, and ensuring more efficient production of billions of EV car batteries each year. That's just one example. Another is looking at the Tampa General Hospital, where they talk about, leveraging Palantir's AI software has helped improve bed placement, patient scheduling, staff allocation, and more, where they're saying we reduced patient length of stay by 30%. We've also saved hundreds of hours of additional lives, saved hundreds of additional lives through this work. So when you have case studies like this, where you have customers saying, yeah, this is revolutionary tech, and the AI is, and so they're figuring out, Palantir saying, hey, we figured out a way to take these chat models and take the intelligence of data integration and really make a difference for some enterprises. And these enterprises don't know how to integrate this LLM. They don't know how to integrate AI, but we can help them with that. We can become this AI integration machine and get this beautiful recurring revenue from it, because it becomes this platform. And they talked about Operation Warp Speed, which, honestly had echoes of, I think, the prior Trump administration over the vaccine. But here they were talking about Operation Warp Speed, where it was about creating ERP and critical software solutions, really any sort of critical software solutions for enterprises faster by leveraging AI. And they're talking about how this is super early innings. So I would say my concerns about valuation, this is going to be one of the key aspects for investors to think about with this video, is you're going to have to balance these two things. One of which is a business that has gone from previously not executing really well. I'd say within the last few years, the execution wasn't great. you couldn't quite see it, but then AI platform came out. You had the ChatGPT moment, and you've seen their business reaccelerating significantly. So I'd say on one side, you have really strong fundamentals. On the other aspect, there's valuation. And we'll talk about that towards the end of this video. But looking at these fundamentals, looking at these case studies, this is jumping out very favorably. And not only are they winning U.S. commercial business, but their U.S. government business is also doing well, arguably reaccelerating, where you see 24% year over year revenue growth in their government business, and they're winning major contracts like a $500 million contract with the Department of Defense to help them scale AI and machine learning. I mean, I think this is going to be a critical aspect of not only the Department of Defense, but I think given how over indebted many Western countries are, they're going to have to consider some sort of zero-based budgeting in the future, and AI will be perfect for that, to go through, like, hey, let's review each line item and say, does this line item make sense from a budget perspective? Let's have some logic and say, let's start scraping this out, because the truth is U.S. government, a lot of Western governments, that's part of the reason why you've seen the tumult in the markets recently, is what's going on with Japan, is really over indebted governments. And, you need to have someone, and ideally some sort of software superpower like AI may be able to help, U.S. governments become, or Western governments become more slim, prudently slim. So you see not only commercial doing well, you see government doing well, you see their profitability increasing significantly. This is a fantastic chart of operating profit, GAAP operating profit. So this is none of this nonsense stock-based compensation add backs. This is saying real profitability increasing significantly. And they have tremendous free cash flow, and a tremendous $4 billion in cash on the balance sheet. So I look at this, they're doing really well. But is Palantir too risky when you factor in the valuation? Let's talk about that dynamic in just 1 second. First of all, in full disclosure, this is not financial advice. Also, quick plug, recently an Unrivaled Investing subscriber posted in our exclusive Discord that, and this is a direct quote, "I've recently paid my second annual subscription and couldn't be happier. I've profited enough already to cover the next 20 years of subscriptions." It's not hyperbole. I actually did the math. That's a direct quote. So come check out unrivaledinvesting.com for compelling ideas if you're interested. I have a weekly letter and exclusive monthly video for subscribers. When I think about Palantir stock from here, even though their execution has been fantastic, I really do think that there are really two paths ahead. One of the paths, which is, it just depends on, what type of journey you personally want to have as an investor. And so one path is to think like, hey, Palantir is delivering. As long as they're delivering, I just want to hold shares. And there's going to be a lot of investors that have that mentality of like, it doesn't really matter what the valuation is. That's the way a lot of investors think. I'm not one of them, but many investors think that way. Where they go, I just want to own companies where they're posting great growth, great profitability, and doesn't really matter what valuation thinks. And you saw a lot of investors get burned that way in the last, market cycle, last market peak, where they said, hey, I don't think about valuation. But if you just focus on whether or not they're executing, and you're saying, hey, thumbs up, thumbs down, purely based on execution, purely based on the roadmap ahead, AI platform, they're talking about revolutionizing software to make it easier for businesses to launch and build new software, disrupting legacy software vendors. I would say Palantir is delivering, and they have a golden future ahead. That's what I would suggest. Looking at their results, looking at their execution recently, I would say this is much, much improved versus where they were a few years ago. Huge improvement. If I were to factor in valuation, I go to AI Ticker Chat again, do the AI Predict, and this is based on AI reading the documents, reading the transcripts, reading the filings to say, hey, it's going to come up with a guesstimate of where, the revenue, the profits, the multiples could be in the years ahead. It comes up with its guesstimate, and it says, oofa, poofa, this is pretty ugly in terms of the potential outcomes. I personally think that this is actually too conservative looking at it, assuming a 10 to 20% profit margin in the future, 30 to 50 times multiple might be a little bit wide. But I look at this, I'm saying, let's assume this business continues to accelerate. So I'm going to give them even more credit on the top line, even though there's significant dilution with this business. Let's say 25 to 30% annual growth from here. That's better than where they currently are. That is giving them, I'd argue, full credit to what they could deliver. if they do better than this, they deserve to, the stock deserves to do well. But let's, currently they're growing, mid 20s on a total basis, yes. And they're guiding to, I think, low 20% growth for the year. So I'm also assuming that margins go much higher over time, 25 to 30%. That's also higher than what AI was assuming. And I'm also assuming a narrower valuation multiple in the years ahead. This is 5 years out. Let's say 30 to 40 times. This is a hypothetical framework. Of course, stock price go way higher, way lower, but putting in these assumptions, and you can put in your own assumptions. Once again, that's AI ticker chat. This is the predict feature. You can see that, you're talking about around $1 a share in earnings, potentially in a bull case, assuming 30% annualized growth. That's faster growth than they're currently delivering, 30% profit margin, significantly higher than where they are today, 40 times N multiple. I usually don't give super rich multiples. And you're talking about a stock price that's not, multiples higher from here. You're talking about, a little under $40 per share. Because, maybe they get to $1, a little under $1 in earnings in the next 5 years. And I think it's worth understanding, putting in those assumptions, this green bar gets to that $1. That is significantly higher than Wall Street expectations. So even if you significantly beat Wall Street expectations, with those types of assumptions, it's just going to be super tough. Like, people are not expecting that level of delivery, and it's still not going to get you to like a 2, 3, 5x sort of upside scenario. So that's the challenge that I think investors need to consider. If you're in the camp that, hey, I just want to own great businesses that are growing, and I don't care about valuation, Palantir might be for you, because they have a lot of sexy stuff going on, and arguably they are one of the defense players that's clearly taking market share, talking about the significant government growth. If there's geopolitical conflicts, maybe people start buying that stock as well. So if you don't care about valuation, and I do. If you don't care about valuation, then you'd say, hey, Palantir's executing, promising road ahead. Why not buy it? If you care about valuation, then you're going to say, this is going to be tougher to sort of pencil this out. My personal investing approach is, why settle on saying, hey, why do I have to compromise on valuation? Why not get something where you can get all three, where you can say, hey, the fundamental growth strikes me as obvious. You got the free cash flow to shareholders, and you also have a valuation that strikes me as reasonable. And just earlier today, I called out to my subscribers a company growing 20 to 30%, so in line with Palantir, but trading at around 15 times free cash flow. So a much, much lower multiple. Palantir's trading at over 20 times sales. So it does give you that sort of context in terms of, there are opportunities out there. I think you just need to turn over the rocks and, think about what you want to buy, what's appropriate for your own investment journey. I hope this video talking about Palantir, I think they are crushing it. They're doing a great job now. I think they've levered AI, and there is an AI revolution, and this is going to be, that's a good position to be in, for them to be winning on a commercial basis. That they're clearly winning market share there. So that's a thumbs up. The question is valuation. And I think looking at this market, where things are, where things could be, I personally want to have valuation as a tailwind, not a headwind in the years ahead. I hope this video talking about Palantir has been helpful for you. If so, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for watching.